Hello, hello.
Got you.
Live now. I'm just gonna post this on Twitter, and then interrupt, not interrupt. Hold on. Let me see. Okay. All right. So, welcome to the stream, Kyle. It's always a pleasure to meet you. See you on camera or IRL. So yeah, thank you for joining. And today we're going to talk about one of your favorite topics: tokenization, stablecoins, and interoperability. So why don't we start with? Hold on, I think it's there is some robotics going on in the background. So yeah, so why don't you tell us about your journey, who you are, what you do, what's your story?
Yeah, for sure. I lead the business efforts at Avail. Obviously, we'll get into Avail, but just to go from the beginning, born and raised a crazy California kid. Went to the military. I met and married my wife, who was also in the military in Japan. Met and married her. We did very well in the military. She got out. I stayed in for 12 years. Did a ton of different stuff, from fixing and working on fighter jets to kind of a political position in Japan to then working in the intelligence and kind of special operations arena, supporting some tier one folks. And then when my wife got a job offer at ExxonMobil, when I was in the Middle East or around the world 7, 8, 9 months a year, leading like 100 people at home and downrange, right out of college, she was making 50% more than what I was making. And I grew up mostly without a dad. So I was like, all right, I want to be a good dad. So got out, gave up a really, really good military career, and then like figured out what I wanted to do. Ended up going to get my MBA here in Houston. I'm in Texas, at Rice University. After that, I went to Goldman for almost 7 years. I did really well there, had a solid VP position, was making great money. But while at Goldman, I was a big degen. I personally got in the space around in 2016. And finally, when my wife realized this is not just like fake internet money, then she knew my heart was in crypto. Like through COVID, I was working from home, and Goldman was my side gig. I was spending all my mind share, all my time in crypto. And so finally got her approval, aka the kitchen pass. I quit Goldman, took a massive pay cut to come actually work in the space. And when I did, I got some offers from exchanges, from VCs, from layer ones, because I'd interacted on a lot of layer ones, layer twos, and I'd had a pretty good network because I've been in the space a while, and chose the graph because the graph is an indexing solution that organizes blockchain data to flow into a front end, and chose that. Actually took a lot less to choose that because I wanted to see if I could survive outside of finance in the space. And I didn't choose a layer one because I didn't want to have a tribalistic mindset, because my incentive would drive that tribalistic mindset. So I went to a chain DApp, industry vertical agnostic protocol that most people, most DApps ended up using, especially in the EVM space. I think we got up to 7 or 8,000 DApps at a high point. And was there 2.5 years leading the business efforts, bootstrapped the decentralized network there from zero, essentially. And then after that, it was going to take 5, 6 months off, take a sabbatical finally. But 2 weeks in, I got bored, listening to podcasts, reading blogs, and where I learned a lot about the DApp space and all that exploration in the graph ecosystem. I didn't know much about what's going on in the modularity world. And so looked around in that space, and chose Avail very methodically, not only because of the founders and what they were trying to build, but I remember it was when I was sitting with Anurag, or virtually sitting with Anurag. I was like, why the hell are you doing this to yourself, man? He doesn't need to work. He's a chief product officer, co-founder of Polygon. I was like, why the fuck are you doing this to yourself? And he said, honestly, man, I don't need to work, but I just need to have more impact. And it was that instant, I was like, all right, I want to work for this guy. And now it's been almost 2 years. I'm still very, very philosophically aligned with crypto. It's more of like a work to learn and not work to earn situation for me. And so I'm still having fun, still a total DGen, total nerd. Less time than I used to have for DJing across all this stuff, but yeah, I love it. And happy
Right.
to go into Avail, but I don't know where you want to
Yeah,
take it.
yeah, yeah. We're gonna get there. So what were you doing at Goldman Sachs?
I did private wealth, so I was managing all finances, essentially personal CFO for anyone that had tens of millions of dollars minimum, but it was mostly CEOs, entrepreneurs, big institutions, pension funds, nonprofits, people that have had massive liquidity events or have massive amounts of capital. So kind of the 100 millionaires, the billionaires. And it was interesting being a poor kid that was enlisted military, that ended up at Goldman because I didn't really fit in. And I had this massive imposter syndrome. And so
Okay.
Goldman taught me a lot about like being uberly confident in myself and my frame of mind
Yeah.
and speaking truth to power. Yeah.
Yes, yes. Goldman is a very unique culture. I had a great 5 years there as well. Huge
Mm-hmm.
fan, huge fan. I think, yeah. So they do have quite a few cultural traits, and they that are very unique. Very proud of the firm. So yeah. So and then you came into crypto. What brought you? I mean, into crypto. Some people come. I mean, I'm in crypto because I'm easily bored, right? And
Yeah.
I need to do something fun, weird, and interesting all the time.
Yeah.
So it kind of fits. But what's your story?
Yeah. So I originally got into crypto like most in 2016, just started because I traded a lot at Goldman in the natural markets or traditional markets. And so I started as more of a volatility trader in crypto and ended up doing fairly well. But it was probably 2017 when I started really looking into things because once you have skin in the game, you pay a lot more attention.
Mm-hmm.
And then when kind of the layer one wars came out, layer two wars came out, and then DeFi summer, I was already very, very deep into crypto, testing out all these protocols, testing out all these chains. But philosophically, I really started.
That's what they call farming these days. Testing
Yeah.
out.
Oh, I missed the DeFi.
Right.
Um,
Okay. Confess,
so,
Kyle.
I'm still a big farmer, but I would
Right.
say it gave me a few different things. In the military, I had a mission, right? And I had people around me that I could attach to that mission, and we all went towards it, and we all were like rowing in the same direction. And I had this big family around me towards that mission. At Goldman, I had economics, but I had no mission. And so uh, I was always kind of in the back of my mind thinking I didn't want to be the people around me at Goldman. They were just
Mhm.
measuring their wallets, sharp elbows, and just not really caring about anyone around them. Just like always competitive, which is fine. It takes a certain type of person to be there. I ended up being successful in that. So on the one hand, crypto gave me both mission and economics. It's something I
Mhm.
really believe in, but it also helped me rethink after being an institutionalized guy for so long in the military, Goldman, my wife's in oil and gas. She was at ExxonMobil and now another oil and gas firm. And then, and just being an incentives nerd, people say fix the money, fix the world. I say fix the incentives, fix the world. And I think
Yeah.
crypto is the only thing right now that can actually change incentives while having a working system.
You
And
think we have done that? You think crypto has fixed the incentives, that we have the
no,
right incentives,
no, I
right?
think we're marching in the right direction though.
Right.
And we're really just figuring out primitives that can scale to the global demand, which I don't think we're even close to there yet. And we're just tinkering. We're tinkering with technologies. Obviously, NFTs had all these multi-million-dollar JPEGs, but the NFT technology is actually really powerful for, let's say, the chain of custody for a home and buying something online, any real-world asset, or that you need to prove, or for fraud and artwork and music and all this stuff. And so, just understanding from the inside out why crypto is the way it is, not in a financial sense, but like why we're doing this, like what
Right.
true decentralization means, what no gatekeeping means. It's
Yeah.
obviously just from a technical standpoint, the most
Right.
efficient way to operate finance 24/7, no gatekeepers, much cheaper.
Mhm.
But from a philosophical standpoint, there's so much we can do for the world in our ecosystem. But I think to start, it's going to be all financial assets on chain.
Yeah. So I mean, it's it kind of started as a financial technology with Bitcoin. So even though we've been trying a lot of different things, 2017 was ICO white papers and so many things that we promised to each other. I think it's an experimental technology.
Totally.
Outside of financial services, I think we're still attempting various things. We haven't really got Uber on the blockchain yet, even though I think the Solana guys keep trying. So tell me, so you did Graph, and Graph is obviously very popular in DeFi. So I'm sure you've had a chance to look at a lot of different DeFi protocols, which is kind of the where which is kind of the where tokenization goes. So what's your understanding of tokenization? As in, what excites you? Why are you so big and bullish on tokenization?
Um, I'll do personally and then externally, like internally, externally.
Yeah,
Externally, when Larry Fink of BlackRock says he's going to tokenize everything, I believe him.
yeah, he's a bald man. We have to believe him,
Yeah,
right?
man, 12
Yeah,
trillion under AUM.
big
He's
guy.
bullish on the ecosystem. So even
Yeah,
if that weren't the case, though, as I mentioned, right now, seeing it from the inside out, the the financial system is so outdated. It's so opaque. It lacks transparency, is what I mean. There are so many gatekeepers, and
yeah,
things still go wrong. And seeing the financial incentives I had, managing a lot of wealth,
yeah.
it's
You're dealing
just
with whales. You're dealing with fiat whales. That's private
yeah.
wealth, PWM.
I was
Right.
the middleman that made money off of somebody else. And what if you can outsource that to smart contracts, which we should? What if you can
Mhm.
have 24/7 settlement across the world? You don't have to wait 3 or 4 days, T plus one,
Right.
T plus two, T plus three, meaning a trade, plus a few days for it to settle. It can be done in seconds or minutes. And you don't have these gatekeepers. And you don't have somebody saying, all right, well, you have to prove why you want this money to go somewhere, which happens a
Mhm.
lot. And that's
Mhm.
in the most developed nation. Think of people around the world that are only exposed to their own currency and they have to go to the black market, pay more money, like above market rate to get a dollar. And that's why the Genius Act in the US is so important because we're at a couple hundred billion in stable coins. We are going to get to trillions within the next half decade, I think.
Yeah. Ronit
Trillions.
Ghosh, one of my friends from Citi, forecast 3.7 trillion, and that report got cited by Howard Lutnick,
Yeah.
the Commerce Secretary, and a variety of other investment banks. So yes, I believe in that number. I think it's a very plausible number where we're going because a lot of the right. Okay, so stable coins, yes, sure, they're
Real
very
quick
exciting.
on
Yeah,
that, just imagine somebody in a, a third world country, developing country, they only have access to their currency. They have to overpay market value for dollars. Imagine all they need is access to the internet, and they literally instantly have full ownership over an actual dollar that's custodied in a bank. Even though I don't fully believe in all the custody, I'm very non custodial. I've been off exchanges for a very long time. But
hmm
not only that, eventually, because banks lobbied to not have interest paid, not only if they have access to the dollar and their net worth is not going down when they can have interest, their net worth will be increasing as opposed to decreasing with the purchasing power of their currency. So I
yeah,
think it's going to be so good for every country in the world, and obviously good for the US because the demand for treasuries will go up, therefore prices will go down, and sorry,
yeah.
prices will go up and interest rates will go down. It'll stabilize the treasury market. So the incentives there for the US as well.
Yeah. I mean, sure, Bitcoiners love to fight the dollar, and there is some truth to it, as in central banks have been printing money, and the United States
Totally.
prints its own, endless stream of money. But when we compare that with, let's say, Argentinian, currency, or Mexican peso, or I think the Turkish lira, then the dollar is still a safe haven asset
Yeah.
compared to a lot of emerging markets currencies, especially where there is quite a bit of political instability and policy instability, right? Where you don't know what the next guy is going to do. I mean, even at least in the US, when the president wants to do something, there are some checks and balances, and the Fed has its independence. Jerome Powell can say no, thank you. That's not the case with most of the countries, and we end up with people's savings and wealth getting evaporated. So yeah, so stable coins that way, I think, as sort of, I mean, not just cryptocurrency like Bitcoin, right? Bitcoin has obviously shown its value, but now you also have tokenized gold. So buying gold is, for example, like I went to a shop here in Dubai, and I said, all right, look, gold is pumping. Why don't I buy some gold? And because I'm a little bit anxious about the AI bubble. So is this a good time to buy gold? And they said, when you come back and sell it back to us, you'll have to pay 4%. We'll give you a 4% haircut. I'm like, bro, I'm not buying this shit. So I'm not giving you 4% back when I come back and sell gold, right? That's gold. Now, when you think about other currencies, it gets even worse. So FX rates are wild. The cuts you get on airport are insane. So I get your point. And then the Turkish lira, Nigerian currency, all of these are really, 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 really. I think I've seen people suffer. So you're absolutely right. And the dollar is still US dollar is still quite a bit of a safe haven compared to a lot of these currencies, right? So and then you work very closely with a bunch of DeFi protocols, right? Because Graph is so popular. I know Aave is a major Graph customer. I used to work for Aave in the DeFi summer. Now, I mean, have you seen a lot of use, like retail users of DeFi? I mean, is this just a whale thing? How have you personally kind of experienced DeFi making an impact on and sort of helping? Is that just a myth, or is that real? What's your
I think it's both, and I think that you do have a lot of whales. It is kind of PvP in a lot of sense, especially when we were in the farming era and all that, and still in that. But you see very small wallets, and a lot of them still using DeFi. And it can change your life if you're early on and you're just participating, you get a drop, and then you have something that you'd never had, wealth. So I think it's people from every country, every socioeconomic strata. And that's the same thing of, let's say, stocks. And you mentioned AI. Happy to get into AI because I'm bullish, even though you think it might be a short-term bubble. I think AI
No,
is
no,
going
no. I think it's long term. It's like the internet when I started, in 98, 97, 98. But I think, everything that's great ends up in a bubble, right? Crypto has been through a few bubbles. Yeah. So, right.
But think of people around the world. They can't trade on with American stocks, or they can't invest in American stocks. They can
That's
on
right.
chain. Not only that, those are the public markets. People around the world don't have access. And if they did, and they were custody to whatever exchange in their country or not, then if they wanted to leave, that country can literally rug them. Or if there's a regime change, like in Iran in 1979, a lot of assets were frozen. And that happens in not every country. It happens in many countries. So people can literally get rugged on their real life savings, not just on our crypto portfolios. And then that's public markets, right? Just around the world. But what's exciting to me, and it relates to AI, more companies are staying private longer. And that means all the run up to Circle's IPO, which they've done a very best IPO this
Incredible.
cycle.
Yeah.
But look at OpenAI, look at XAI, look at all these AI companies. They're all private still, and they're staying private longer until they get to these 100 billions of valuations.
That's right.
From the whatever 10 million, 50 million pre-seed or whatever, or initial raise, all that value is going to institutions. Every dollar, and no one in the private markets has access. So what Robinhood is doing, I think, is really powerful by buying allocations and OpenAI, XAI, and others, giving people the ability on chain to get access. Another one that's doing that, it's done really well, is StationX. I think it's named Rishav. And it's cool because I want access to those private markets because in the past, you'd have to IPO earlier because there wasn't enough capital. Right now, there's enough private, wealthy, and institutional capital that can keep swallowing up those rounds until they get to a $500 billion valuation. And even if it gets to 2 trillion, that's not a massive multiple. So giving access to private retail users, as opposed to just all the wealth in the world being created right now in AI and other places, going to
Oh,
institutions. I think that's huge.
I think that you're absolutely right. So AI is going to generate, just as much wealth, if not more, than on a relative basis, proportionately as the dot com boom. Right? Sure, it was a bubble, but
I
look
think
at
it'll
what
be much more.
look at us now, right? Yeah, it could be more. Absolutely,
I
it could
think
be
it'll be
much more.
much, much more. Nvidia is already a $4 trillion
Yeah,
company. There will be more. There's going to be $10 trillion companies. I bet in 5 to 10 years, the AI sector will be worth 30 to 40 trillion market cap full.
I agree with you. I agree with you. I think it'll go through a, I think we could, all markets go through bubble, right? Railways went through a bubble, crypto went through a bubble, dot com went through a bubble. We get excited about the promise, and then we underestimate the amount of time it's going to take to deliver that value. That's fine. But yes, I mean, if I was 21 today, I would do nothing except AI, right? I mean, just
I
forget
would
about
be
it.
AI and crypto. AI and crypto.
Yeah, that's true.
I think AI is the most monumentally and universally transformative technology. I do think even the hardware, like an Optimus robot or any robots, I think those will be the biggest physical products ever, even
Hmm.
above the iPhone, even above
Yep.
the laptop. Every factory, anything that moves will be driven by AI and or robots. Anything that is mundane will be done by robots and or AI. And so it's truly going to change everything about the way we live. But there is so much cross pollination and overlap in AI and crypto. I listen to a lot of AI podcasts. Every big influencer in the AI space, whether it's the All In podcast, Diamandis's Moonshots, BG2, they're all very much into crypto, and they talk about both of them. Even though it's straight AI podcast sometimes, they always kind of bring in crypto. And so there's a lot of overlap.
Yeah, there's a
The
lot of synergy.
belief
That's
system,
right.
I think it's
Yeah.
sci-fi nerds. Any sci-fi nerd's going to want to be an AI. Any sci-fi nerd that has gone through simulations in their head probably should be in crypto, especially if you're, a person who believes in privacy, true ownership,
I agree with you.
and not the like ultimate power of the state or corporations.
Yeah, yeah, that's a really good point. But I think the point that you made earlier, which is that the current system locks out retail or
Yeah,
ordinary people out of the value of these investments, and so like I think Databricks did a Series K,
yeah.
and what the hell is a Series K, right? Netscape went live at what 500 million valuation, and so now you don't see that. So we kind of now all you see is private investments, private equity, private credit kind of taking over the market, and retail kind of getting locked out of all of these things for a very long time. And then yeah, that's really sad. And you think tokenization can solve this?
Well, I know tokenization can solve it.
How?
So one way is just what Robinhood and StationX are doing. They're buying allocations, putting it on chain, and people can get access. And they're
Mhm.
taking a small cut, but people have that massive uprun. So that's just one way in the private markets. I think there's still a lot of work to be done to figure out how what other ways, as opposed to just the shell game of buying here, getting exposure here. And there are a lot of risks, not only on the regulatory side, which have
Yeah.
gone down, but obviously
Early
the
stage tech, you always get some, some weird stuff. But let's talk about the opportunity first. So let's say you tokenize Robinhood stock. Now what happens?
well, you tokenize, let's say Robinhood tokenized OpenAI.
Yeah,
It's on chain. You can go buy it on chain
yeah.
and you get exposure. And even if it were a synthetic, right?
Okay.
It's hard because synthetics have an expiry date, so you can only go so long. Like prediction markets, you could say, oh, does it get to this level? But prediction markets always need an expiry. You have to have the underlying if you want to have infinite commensurate exposure to that ecosystem by the time it goes IPO or whatever. And so there's really no other way to do that except for secondary markets. But retailers aren't going to go into secondaries. You can't buy $1,000 on a secondary market. Those go to institutional investors as well that are diversifying, buying for cents on the dollar because people want liquidity from their usually very illiquid private venture. I'm sorry, venture capital or angel investments. So on chain just democratizes access. It's a free for all. Anyone can go buy it, and it's I always thought of crypto as, at least from an investment standpoint, it's liquid piece, it's liquid venture capital,
You
right?
are
You can
absolutely right. It's definitely
have
liquid.
something, you
Yeah,
can get
yeah,
rid of it, and you can get rid of it in an instant, as long as there's
Yeah.
liquidity and the
Yeah.
markets are there.
Yeah.
And so you're not making these investments that you'd need to wait 15 years to see it 100x or bottom out, or even 1000x. It's much more than that for AI companies. But you can buy something, you love it, you don't like it later, you can get rid of it. And as long as there's a market there, you can just put it out in the open market. So I think it's really powerful. That's another thing is crypto just makes it where all buyers and sellers can come to the same place immediately without gatekeeping. It's
That's
really
right.
powerful.
Yeah. Okay. So which are your favorite projects in this space? Give me without upsetting other people. Give me like top 10 or top 5 list of projects in this space that you think are particularly interesting to look at.
Well, let's start with vertical, and then I'll go down like the industry sector, and then I'll go
Yeah.
down into maybe I'll go
Yeah.
down into projects. I've
Yeah.
always been a big DeFi guy, always, and so let's even go down. Aave's winning by a long shot, over 70 billion. I don't know, 80 billion now, and they're the most, I think, institutionally accepted.
Yep.
Stani team have done a great job,
Yeah.
and I do think many institutions are going to be flowing money into Aave and others like it.
My
So
bags. Right.
yeah, I'm very long. I remember, it was Lend to start out with, and I remember fooling
Yes.
around with back then. And
Yeah.
it was always a cool product. It's come
Right.
so far along, but I'm
Right.
very big and long DeFi in general. There's going to be a
Right.
lot of people that die along the way, but I'm very big DeFi. We're I
Yeah.
think we're 1/10 of the way over the next decade to
I
where
mean,
we get
that's what we do in this industry for the most part, right? Yeah, absolutely.
And then I'd
Right.
say there is still an infrastructure premium, as there's always been with these blockchains. I think a lot of them are overvalued, but there's going to be a handful that win. And so those are the OGs, the Bitcoin, the Ethereum's, even though Bitcoin network is more as a store of value, Ethereum's more of the compute, but it's slow and it can be expensive. There's other layer ones. I'm not as bullish on, let's say, from the value perspective of layer twos, because a lot of them are just centralized. And if they don't have the distribution, not a lot are going to, at least with the technology, because it's expensive to keep a chain going, not a lot of them are going in their current iterations are going to end up being successful. Though I think eventually, once we make it cheap enough, the roll-up thesis will probably come to fruition. People will go from DApp to find product market fit, then launch their own app chain, but it needs to be cheaper, less expensive, more simple, without all these infrastructure pieces. So it's still the infrastructure of what's the stack that the world's going to build on. We don't know yet. A lot of people think Ethereum for stables. A lot of people think Solana for speed. But there are others with better technology, but they don't have as good a distribution and user base. So I still am a DeFi and infrastructure nerd, right?
Yeah.
We don't know what the stack's going to be. We do kind of see who the winners are in the DeFi space, but there are new ones coming out all the time, which I love. And whether it's lending like Morpho or an Aave or just DeFi in general, the exchanges, and then you see this hyperliquid stuff. I think all that is deep. I'm a big DeFi infra guy.
Yeah.
Those are two. And then I do think stablecoins will see 10 to 20x growth in AUM or TVL. And there's no real way to long that. You're not going to long USDC. So you have to get access to the actual equity markets like the circles. USDT, if it ever does an IPO and comes in accordance with the Genius Act and others like that. So I guess that's part DeFi as well, and RWA.
Right.
I'm not
So yeah, so you
bullish
gave
on.
me Aave and Circle, obviously Tether. What else is particularly exciting? What?
I mean, there's other infra. There's layer ones I pay attention to. There
Okay,
are
so
layer.
you're bullish more on the infrastructure side of this as opposed to some of the core tokenize people who are actually tokenizing assets.
I mean, there's those stocks. I mean, like Robinhood and Galaxy and all that.
Yeah,
Oh,
yeah.
I'm bullish on them for sure.
Right,
Robinhood
right.
has seen an insane increase, and I don't think they're even close to done. I think they're going to be a main player in the tokenization effort. And I think Robinhood's doing a good job of winning so far, and I think they'll keep going. but those are stocks, right? Those aren't tokens really that you can have. I guess you can in some ways, but yeah, it depends on if you're asking just because I've gotten into the stock world and not into the token world. And in the token world, I'm bullish on a lot of things, though I don't like usually talking my bag. I don't like usually shilling anything I'm in. Obviously, I'm bullish on Avail, so I'm working for Avail.
Hey, that's why we are at cryptos anyway. So
Yeah,
okay,
no,
right,
but for
right,
me,
right.
I don't usually mention
Yeah.
projects
So
just
so
because
you
I don't want people to feel
yeah.
bad if it goes up or
Uh,
down.
all right. That's fair enough. That makes sense. So okay. So you're bullish on infrastructure, but I think what we are seeing is that there are already some chains that are doing pretty well, right? It's not a winner take as of now. It's not a winner takes all market. You got Ethereum, you got Solana. Even on Ethereum, you have Base, Arbitrum. Now you have Hyperliquid, and now CZS is really BSC is obviously big, right? I
Crazy.
mean,
Yeah.
crazy big. It's always been very big. Now CZ is going big on Aster,
Yep.
looks like, and Twitter has been full of it. Hyperliquid is obviously at least for now, it's very successful. Hopefully, it'll continue. I'm a big fan.
Yeah.
So now, I mean, don't you think there is a lot of fragmentation that we have to deal with now? I
Yeah.
mean, there's
That's
so many different chains. So how are we going to manage all that?
the biggest UX problem in crypto, including like not being Web2 experience. Yeah, interop. I I'm across so many different chains, and it's such a pain in the ass to go from one to the other if I want to buy something, or if I want to stake somewhere, or if I want to enter anything. It is a massive problem, which is why I
Yeah.
was so excited to get to work on it at Avail. Just it's
Yeah.
solving a use case for me that's going to make my life better.
So how did that work? So I mean, I don't even remember where I have like so I'm in a trader chat, and I'm a terrible trader, but I'm in a trader chat because those guys teach me everything I need to know about what's going on in crypto.
Yeah.
And it's really really useful. So now one thing is funny about everyone in that chat is that no one really remembers where all the money is,
Yeah.
right? So I think I have I have 6 Hyperliquid wallets, 5 lighter wallets, and they have all the small amounts of money, or some less small than the others, lying around, and it looks like everyone is in the same shape. So how do you solve that problem?
Yeah. So that interop is related to the biggest UX problem in Web3, which is it's let's say I have money all over the place in all these different chains and all these different wallets on all these different chains, and I wanted to buy something on some other chain. Right now, I have to sell into let's say USDT or USDC on all these different chains, aggregate it, and bridge it to one, and then bridge it to something else and go buy something. And so bridges are, they're useful. A lot of them are like 3 of 5 multi-sigs, 8 of 11 multi-sigs. So they're not perfect. Still got a long way to go there to make it more resilient and anti-fragile. But what if, like with Avail Nexus, it's so powerful with these, let's say TEEs and solver-based, intent-based solver networks, which means that me as an end user, I can have $10 on 10 different chains. All I see is $100. And then I want to interact on an 11th chain, and I don't care about bridging. I just have one giant prime brokerage balance, and I can use a DApp. I don't need to worry about what chain it's on. I just use the DApp, and it aggregates all those, does everything behind the scenes. That feels like Web 2 to me. That's what we need, that UX, where it feels, imagine in Web 2, you don't even have that. You have multiple bank accounts. You still have to go from all these different bank accounts to one to send over here, which is kind of like bridging. But what if you could use all those bank accounts and only see one balance? And you can interact on something else without wiring or transferring your money out. That's the interop future. That's the interop now, actually.
So what can I do with your product today? What can I do with Avail Nexus? Is it Nexus?
Yeah, Avail Nexus. So you can do a couple things. One, on the end user side, you can do that. You can have these unified balances, interact with any DApp on any chain. That's enabled. Right now, there's 12 chains, very big layer ones, many layer twos that are the biggest ones. But even more important for a DApp, imagine a DApp is really committed to one chain. There are many Arbitrum specific chains, base specific DApps. They don't have to deploy to another chain. and they could just tap into the end users and liquidity on other chains without doing anything. And they don't have to pay the infrastructure cost on those other chains. They don't have to do the development work of going on those other chains. And they just literally expand omni-chain with just a few lines of front-end code, JavaScript on the front end, no back-end changes, no smart contract changes. They just come into this massive liquidity network and tap into everyone. So it's good for end users. It's good for dApps. It's actually even good for the chains because the dApps that go there are sticky. They don't go deploy somewhere else. And if they see a lot more success on another chain, they're not going to want to put more time there. So it's good for the chains to keep people sticky, dApps. It's good for the dApps that don't need to deploy. And it's good for end users like myself because I don't even need to worry about what chain I'm on. I just need to worry about what dApp I want to use. It's actually super cool.
So I'm long Aster on 5 different perp dexes. And yeah, so I mean, so it's a farmer's life is hard, right? So so now, so one of them is on BSC, Aster. One of them is on Hyperliquid, Lighter. You obviously know. So there's a bunch of these now, and I'm on Bybit and whatnot. So I think unified balances would help me a lot because I want to know where my money is, and also kind of keep track of like how much money I'm holding on, and to some extent, and it's a very useful feature in the sense that I want to be able to see, how much money I'm moving around between different chains and kind of see it all in one place. So that's handy. But is that just a bridge? How is that different from bridging?
So there's behind it, underneath it. Eventually, maybe we'll get away from that. But it just makes liquidity bucket. And most importantly, changes the UX and DX, the UX for the end user and DX for the developer.
So this is funny because I remember when BlackRock Biddle was tokenized on Ethereum, and then
rage quit. I can keep going by myself. For anyone watching, find some hold music. Keep on that jazz food is chef's kiss. All right, so it's this platform. Said he'll be it back. Let's see that. Probably not that much is gonna make it back. Just create a power market. Epic xylophone. Oh, that's pretty stupid. That's perfect. So, see how bad this goes. All right, for anyone still watching, got a call from my son's school. He had a headache this morning, went in, tried to stay. Now he's puking all over the nurse's office. So I'm going to have to cut this short and go pick up my sick son and probably get sick myself. But until then, back to the hold music. We got the guitar. It's all the instruments. Seriously. All right. Just heard from Ajit. Still having technical problems. We are going to split this into a 2-part episode, and we're going to call it. Thanks for anyone still on there. Have a great day, and make sure you listen to some epic hold music throughout your day. Later, everybody.